Sorry about the late start yet again. I was in a pickle this morning. My wife took my youngest daughter into the beach today, while my oldest daughter's at day camp, which obviously opens the door for golf. But I needed to get the grass cut, so it was kind of a setup. So I figured I'd get the grass cut before we get to the market. So don't mind the no shirt. I'm boiling hot because it's friggin' nice for once. But anyways, enough about me. Let's get into her. So you had the Fed yesterday, right? And what do we get from the Fed is, a perfectly balanced profile. Really nice, perfectly balanced profile, which keeps, us trading between that certain range where we're clearly balancing right now. What happens usually off of these balances is liquidation. Now, I'm not saying we're going to liquidate, but I am saying that is in the back of my mind for sure. How we responded at our all-time high in around 44.17 on ES is kind of my, area of interest. I won't be shocked, if we trend one way or the other, especially after the Fed. And I think going with the break out of this balance, whether it's to the upside or downside, is probably the best play to do today, especially into the end of the week. Just because it will be the strongest play. And then from there, we can monitor whether we're going to have continuation or rejection. So coming in today, it's the same as yesterday. I'll be monitoring that 64 level for support, and I will be monitoring 44.17 for resistance. I'll definitely be monitoring 44.09 area, just above yesterday's profile, see if we find a seller. If we do, that may be an area to start building in against the all-time high. But like I said, I'd rather be patient, allow the market to give me a trade, and I think that trade will come on the break of this balance range. So that's where I'm at with the ES. R2Y, I've talked about R2Y quite a bit. I talked about really this exact thing happening, looking below here, testing the 21-day moving average, coming down, testing 2160, and then potentially moving its way up to 2320. I've talked about quite a bit, maybe with you guys, definitely with the TradeUp room, that I'm positioned for this exact play to take place. I started building a long in when we came towards 2160 over the last few days. And I'm hedged off, obviously, with some puts just in case the market decides to take a tumble. But needless to say, I still am a firm believer that we're going to make our way back to 2320. I don't know if that happens today or next week or whenever, but that is my end goal for this trade, at which point is where I'll, either decide to take the trade off for profit or hold it and see if we'll break above that balance range. So as we're going here in R2Y, one thing R2Y has struggled with is finding a natural buyer above 2210. They've really, really struggled with that. And Globex last night is the first session where we've actually seen R2Y find a bid above 2210. So now that R2Y's found that bid above 2210, I really just want to monitor the pit session hours and see if that continuation is going to happen. Now, ideally, we open, we flush a little bit, maybe 2230 area, 23, 22, 26, somewhere in that area, to take out some of the late buyers in Globex, bring some of the inventory back into correction, and then potentially, rally the market all the way up to that 2320 area, which is my target. So that's kind of what I want to monitor in R2Y. I'll just continue to massage that position, and we'll see how it plays out. NQ, NQ yesterday had a nice recovery day. NQ's kind of in a funny place for me, like I've been saying. I'm not super interested in getting too involved on the long side up here, and I definitely am not looking to fade it up here. So it's more just a monitoring market for me at this point. If NQ is to fail, somewhere in the 775 area, 765 area, somewhere in that trend line is where I really want to get involved. If we do, say, break below this upper trend line, I may fade it and see if we can get that full move. But that's kind of like playing the B side of the A trade, which is, obviously carries a little bit more risk. That may be an options play to hedge, overall over a longer dated thesis. So as far as NQ goes, it's the same idea as ES. I think you go with the break, right? I think if you break above yesterday's high, you go with the break above yesterday's high. Ideally, any break above yesterday's high, retest somewhere in that 1540 area, 1536 area, and they find a supportive bid there. For right now, they're kind of working that as resistance. Likewise, if you were to break down and you break below NQ's low, I think anywhere up in this 32 to 52 area, I know it's a wide range, 20 points, but nonetheless, it's NQ. We all know how it moves. Any move back into that area, I think, is a fadeable move as long as you find a seller below it, and that's just the relief rally. For right now, they're using that 32.52 as support. So that would have to change for me if I ever even thought about fading it. But overall, I'm looking to do a very similar type play as I would in ES as far as going with the breakout or going with the failed breakout. In my personal opinion, I think ES and NQ could be tradable today. I have a plan for them. If the plan doesn't come into play, I just won't trade them. I'll just keep playing with my RTY trade and massage that one as is. But if there is an opportunity, and this does come within what my thesis is as far as going with the break or fading, the failed break, I will take that trade if it does happen today. Other than that, if you do like these videos, I appreciate the thumbs up and the comments. Feel free to interact, if you have questions. I did yesterday upload the first week of my very first profile series that I did about a year ago. They're not short. They're both 35 to 50 minutes each. So if you have time over the weekend or you're interested, take a look. And then I'll see if I want to add, the other 43 videos that I have, all about the same length videos. The 43 other webinars that I have. Trade well, trade safe, trade within your plan. Don't get captivated. Don't get stuck in this chop. If the market trades in here, I would stay away personally. Just because you know what it's going to be. It's going to be a lot of back and forth, a lot of chop, and it will crush you. So I would wait for the break. I plan to wait for the break out of this short-term balance. And from there, we'll see where we get.